people are listening, they might be saying, well, Lyn, I save my money. And that's probably the most advanced most people's personal finance is I put some extra money in my fiat currency in the bank. And that's all well and good until maybe you start to consider this concept of inflation, which I think luckily in the last 18 months has got a lot more airtime. I actually have my 17-year-old daughter in here talking about money, and we talked about Bitcoin, and she asked some really good questions like how come the central banks can keep printing money forever? That doesn't sound right. It was strange, that even a 17-year-old was asking some really good questions. Let's talk about inflation. How do you first have that conversation with people to even understand what it is? Because I think it was Terence McKenna that said, I don't know who discovered water, but it definitely wasn't a fish. And sometimes we're in the middle of this and it's hard to see what you're in.
I find that a picture is worth 1,000 words. And so a chart just showing what something cost over a century, for example, tells you almost everything you need to know about inflation. And, sometimes I try to think back to when I started saving and investing, I was like a little kid. I was like, we basically, I was impoverished when I was a child, and then I moved in with my father and we were, more comfortable. And I started saving and investing when I was not even 10 yet. And I shifted into, in addition to just, saving cash from birthday presents and stuff, I shifted into like little tiny silver coins, and eventually like little fractional ounce gold coins. And somewhere along the way, I knew what inflation was. I think it's because I was always mathematically inclined. And so I just kind of, it's something that just kind of randomly clicked with me. But I think for a lot of people, it's showing them a chart of inflation over time. And going back to my father's example of how he saved, but he never compounded, right? He always was financially secure, but never, I guess, abundant, is because he would save for things, but he didn't understand investing at all. And back then, you could at least earn a yield that exceeded inflation, but it was still maybe smaller than people think. So people think that they're earning 5 or 6% from the bank, but inflation's 3%. They're earning like half of what they think they are in terms of actual purchasing power. And then you're also, if that inflation metric is understated, actually inflation is still higher, then maybe they're not even saving that much or earning that much. And so I think it's one of those things where people really need to go look at these long-term charts and also just run the math, especially in the modern times where interest rates are below the inflation rate in most countries, especially most developed countries. Saving is a very challenging thing for people because you're constantly adding more ice to like a hot area that's just melting constantly. So it's like this, you're on a treadmill rather than a long-term compounding approach with that.
Yeah, and times have really changed. I mean, I think when I was a kid, well, you had what, in the 80s, and you had double-digit interest rates, double-digit inflation. When I started on Wall Street in 93, I remember Fed funds overnight rates were 3%, long bond was 6%, and now these days, you're much, much lower than that. And like you said, in most developed countries, inflation now over interest rates. I'm going to put up a chart here that you posted on Twitter a couple days ago where you just said the inflation report came in hot this morning at 6.2%. And you can see this kind of big increase of inflation, I think, in 2001. And I guess this is one of the many charts that you show to a lot of your followers. What should people pay attention to in this chart? What's the thing that really struck out for you?
Well, I mean, overall, the issue is we're seeing basically a giant disconnect between inflation and rates. And so, the United States right now it's 6.2% official CPI, probably higher if you measure it in the way it used to be measured, while rates are near zero in just about every developed country. And the same problem is throughout Europe at the current time. The same problem is in most places. And so that, one of the key takeaways is that basically the world's now entering an inflationary spike that we've not seen for a period of time. And of course, there's different debates about how persistent it is going to be and how, sticky it is, how kind of, what's causing it. But overall, it's something that, for a while, for the past couple of decades, you could kind of get away with not following inflation. Whereas now, because there's such a disconnect between rates and inflation, is something that every person has to know. Because if you're simply failing to grow your wealth, that's one thing. But if you're actively losing purchasing power with your money in the bank at a notable rate, that's a more serious problem that people have to pay attention to.
What's the reaction to most of the people you meet in public and the people that subscribe to your newsletters? I mean, Do they kind of get it right away? Do they need a few ways to convince them? And then after that, what's their next steps once they see this actually happening?
I think, I mean, there's a big disconnect between my readership and people on the street, right? So my readership is self-selecting towards people that are already interested in the subject and generally know about the subject. And so they get it. It's something I cover quite a bit. Whereas, a lot of people I run into, they just, they don't fully grasp what it means to, have that deep of a negative yield, right? So they kind of assume that the curve it's I would describe it as recency bias. So as people, as humans, we often think that the last 5 years are going to tell us a lot about the next 5 years, or the last 10 years about the next 10 years, right? Things we assume some degree of stability. And so even though this past decade was a pretty bad one for savers, it was hard to notice because it wasn't too severe. And they assume that maybe the next decade is like that. They'll think I probably should invest, um, but I don't know how to. It's scary. They're worried about volatility, and especially with it is challenging because with stock valuation so high, especially in the U.S. and many places have very high home valuations, it is intimidating for investors to come in. And so they feel like they're stuck between a rock and a hard place. They're like, well, there's expensive assets. I don't understand. They're volatile. What if the market crashes? And then they're like, or I can just hold this melting ice cube. And many of them aren't fully aware of just how rapidly that ice cube melts.